Ladies and gentlemen of the crypto space, we're live on a Tuesday, August 2nd at 11:23 a.m. A little early today. Let's see what's going on. Obviously, today is an insane day from a macroeconomic standpoint. We got Pelosi flying into Taiwan. That is going to spark volatility across the board, with basically uncertainty. We have no idea what's going to play out. We could speculate in optimistic as well as pessimistic directions. In any regard, volatility should be expected. Now, volatility is good. Volatility to the upside is what everyone wants. Volatility to the downside is what short sellers want as well. What matters is your strategy and your capacity to stick to your rule set and how you engage with the market. Maybe you're a short seller and maybe you like volatility to the downside. Maybe you like to buy something and play the long game and you like volatility to the upside. The complexity is most people don't define rules. You need to define your rules and stick to the rules, and the better you stick to the rules, the more successful you're going to be. Obviously, you're on this stream. My rules are I like volatility to the downside as well as the upside, and as the title of the stream says, I like to capture that volatility by purchasing assets that surface the cash flow produced from that volatility. I want to buy those assets on the cheap. This is a very different strategy to engage with the market as compared to persons that want to buy something low, sell it when it's high, or buy something when it's high and cover it, or sell something borrowed at its high and buy it to cover when it's low. Short sellers. I don't really engage in that type of market activity anymore, and folks will have a variety of opinions of things we've done in the past, but in any regard, I like to hit home on the way I engage with the market nowadays. So I'm looking for discounts on cash flow. I want to purchase income. And this has been the most effective narrative for me, and I think it's going to be the most effective narrative and way to engage with the markets for the vast majority. It's obviously a sustainable methodology. It's a methodology used by historic value investors, by historic dividend investors, and the Oracle himself, the greatest investor of all time, the Warren Buffett, and all he is a cutthroat discount buyer. The man likes to buy cash flow on the cheap. If something's going to pay me, I want to buy it, but I want to buy it cheap. If I'm going to buy $1,000 a week, isn't that a weird way to talk about it? I want to buy $1,000 a week. How much does it cost? If I want to buy $500 a week, how much does it cost? What's the volatility of the $500 a week? What's the odds of the $500 a week going up or down? How much does it cost? What's the volatility of the price point? Can I buy it at a cheaper price in certain circumstances? Oh, we happen to be in a macroeconomic shitstorm where I have the potential to buy $500 a week at a discount because other people are maybe speculating on the price action going up or down, which is something irrelevant to me. Hopefully, they're speculating on the price point going down so I could buy the $500 a week at a steep discount. Fire sale prices, we had it about a month ago. We're looking at the convex chart. Convex was selling at around $3. It's up at about $6.77. Last week, folks were talking about, oh, you're going to get caught on the sidelines. Okay, the market's up over 100% here. Market's up damn near 200% on curve down at buck. No, I'm sorry. This thing bottom bounced at 55 cents. This thing is up big. It's up almost 200%, 160, 150 plus percent. So you are not getting caught on the sidelines, albeit the point to make is that there was discounts, and the discounts were last month. There is no discount in the market right now. The markets have ripped upwards a very large, meaningful percent. So this is a period in time where I'm certainly not buying. I'm accumulating cash. The overtones of the way Buffett interacts with the markets are something that I think I'm deploying, and that's the sentiment I get with how I'm engaging with the market. I'm not seeing a discount. I'm seeing resistance. I'm looking at the dollar chart, actually, which is what is really at a crossroads today. Let me show you the two time frames I'm looking at. If you look at the 4-hour, we breached the 200 SMA to the downside, and we're looking to put in a previous support flipped resistance. So if this hits and pushes for a lower low, that's not what happened here. The 200 SMA held, or actually it flipped resistance here, but it ultimately held. So the problem is the 4-hour time frame is not the best to go on. So we're going to have to draw on a longer time frame to get a real sense of where things are, which is a precarious situation. I would like to see resistance hold here, and then we go out to the daily. We're at the 50 SMA, and it. Where the precarious situation comes in. Now, bear in mind, we need the resistance to hold on the 4-hour and it to break for a lower low, particularly because we're in a bullish engulfing situation on the daily. So this takes days to play out to really get a sense of where we are. This needs to break the 50 SMA to the downside for risk assets to have any chance of not producing discounts. So it's a game of patience to see when the best discounts will emerge in the market. So what can we say? We could say that there's no discounts right now. The market is positioned to print discounts if the dollar keeps strengthening, because that's going to dry up liquidity worldwide as they need it to service their debt obligations. But as the dollar comes down, it is cheaper to buy dollars, so they have more excess currency to purchase risk assets, and that's basically where a reduction, a very oversimplification of the global financial system. A lot of folks wanted me to talk about Aura, which is basically the same thing as the Curve Federation in most regards, except the Curve obviously has first mover advantage, is much more entrenched. Curve has a monopoly on stablecoin liquidity. So some would argue that Uniswap has their fee structuring has affected the landscape, and it has to some degree. But it's not a winner-take-all type situation, and Curve is overwhelmingly supplying the vast majority of stablecoin liquidity. And it's just obvious at this point, as well as the functionality it provides with regard to disintermediated ownership of protocol cash flow. That's going to attract capital in, and that's why I talk about Curve so much. So this is why we talk about Aura of late. This was the hope I had for Solidly, which completely failed. It was a failure of a launch, but Aura thus far has shown that it is an effective launch at producing the convex effect on Balancer. So I do have my eyes on Aura. It is a very cash flow positive operation. It is a very enticing source of cash flow. It is proving to be very productive, but not at this price point for me. I won't buy at 287. I want steeper discounts, and I wouldn't buy unless it goes significantly lower. So I watch it. I have it up, but I wouldn't buy unless this thing was $1. I'd buy it $1. I'll buy a position at $1, but not at 287. There's no discount in this market. So my eyes are there, but I want a cheaper price point. I got a bunch of charts up. It's basically the same old shit. Bond market looks absolutely screwed. It's fallen below the 10-year has fallen below the historic line in the sand. It's a precarious situation. We could easily see significant risk off in equities markets, and we could see the bond market rip to the upside, which yields would collapse to the downside. I don't think we're in a situation like we had in 2020 where we had a massive capitulation. Credit spreads, FRA OAS, this stuff. Oh, do I not have the chart? We can look at this. Credit spreads. Credit spreads don't look half bad. No, I don't want news. Uh, it's a, it's a decent chart. Okay, but it's not the extent of all the data available with regard to stress in the market. But as you can see, we are elevated, but it has been coming down. So we're nowhere near a spike like we had in 2020, which when you have a credit spread blowout like this, you just don't have it's liquidity drying up. If there's no capital available, business is going to basically have an impossible time finding debt to continue their operations, and everything just comes crumbling down. Um, so I don't see too much stress in the market. Now, bear in mind, there's a lot of indicators to go on, and right now we're trying to figure out whether they capitulate and they flip to a more dovish stance at the Fed. And the happy Hawaiian has some good charts that he follows or created. Oh no, what's his Twitter handle? Yeah, here we go. Let's see if we can find his charts. Yeah, this is a nice one. So we're way past the Fed pivot indicator on this oscillator, this constructed uh, chart that he produces. It's a nice visual depiction of a typical historic pivot point. There's another one that he had the other day. It was basically, what was it, the 3-month, 10-year spread? And we're past the pivot point there as well. Let's see if we can find that one. Yeah, this is a nice chart. So anytime this inverts, they've pivoted historically, at least back to 89. Invert, pivot, invert, down, invert, you'll come down, invert, you'll come down. So this is very consistent, at least back to 89. So eyes on the, was it the 3-month to 1 month? 10-year and the 3-month and the 10-year and 3-month treasury. So we could actually plot that here. 10-year minus 3 US US 03. We could do yields. Let's see if this works. That's on log. So maybe it did invert. I mean, we're at minus 206 on the spread between the 10-year and the 3-month. I don't know. Let me dig into the data, but this is obviously consistent with what he was depicting, and we're way past pivot points. The problem is we have macroeconomic uncertainty, we have geopolitical risk, we have an agenda that they're playing out at a political level, so it's not, nothing is ever guaranteed to happen. There's always a spread of possibilities, and obviously they're sticking to their guns because obviously they also have their credibility on the line. So there's a whole complex equation trying to get a sense of whether significant changes are going to happen in the market. And basically what I see is just volatility. And I don't mind if there's volatility. I don't mind if there's no volatility because all I want is damn discounts at this point. Otherwise, I'm not buying a damn thing. Let's go through some comments and see if I can help some folks out. Crypto Bets in the house. Tauman, Zoidberg, Ben, MF Income, a pleasure. Ben, well, what's going on with the Chinese real estate is collapsing. They're not paying their mortgages. It's a protest. You could easily have the China collapse. Literally, if there's what, 300 and something billion dollars worth of bad debt, it's an absolute catastrophe. It's a humanitarian catastrophe. It's a humanitarian catastrophe in Europe with what's going on with energy and Russia turning off the energy. I mean, even if they don't turn off the energy, was it running at 50+% less deliverables? So it's going to be a crisis in a couple of months with regard to the winter. So this is all coming. It's all here. We know it's here, and it's only a couple months away. And there's a tremendous amount of uncertainty and risk, and people are angry, and tensions are hot, and so you got to have your head on a swivel trying to figure out what's going on and why price action is going in a particular direction, which is why I've developed this methodology for interacting with the market where I don't give a shit what the price is and I just want to buy something that's cheap. I got a good deal on Curve. I was able to snag a bit of a position at 66 cents. I think I did well with the dollar entry, so I took a larger position, about 3 times the size of the 66 cents at a dollar. At this first peak, bounced back down, broke through the dollar, and since then we have a bit of an inverse head and shoulders. It's not really that. It's more like a double bottom. There's some nice support right here at $1. Turns out the dollar probably was a good entry. The $1.10, this line right here, has expressed meaningful support. And to top it all off, if you zoom out to the daily, you'll notice there's a bit of a trend. And these lower highs, it broke through and it has expressed support. So it's a breakout, a retest, and support express. Clearly, this is early times, but this is riding the 100 SMA to the downside, and there's support thus far on the 100 SMA. This is promising to see with regard to not going down. This does not mean appreciation. It just means not going down. It's above the guppies. Guppies have turned gray on the daily. That is always a good sign for a bottoming process. There is significant support right here for it to not go down. That doesn't mean you buy. That's not a discount. There's no discount at $1.33, and there's also a lot of wiggle room. This line is not to wicks to the upside. It's just on the average. But it's overall the picture that's being painted on the daily for curve is quite nice with regard to price action not going down from here. No discounts from me that I see. And I'm inclined to see that we probably are less likely than more likely to see a discount, which means, all right, I'm not going to take any more curve. Convex also looks strong, bit of an inverse head and shoulders. It's nice to see the 50 SMA forming a bit of a bottom. Much shorter history for the chart, so we don't have an initial cycle, but from a Binance perspective, we do have a relatively large falling wedge structure and a breach through the 100 SMA in the daily, and that would be a significant indication of not down. And once again, I care about not down. I don't really give a crap about appreciation. I look forward to the volatility. What happens when you have volatility? Basically curve prints, and that's always nice because that's the paycheck at the end of the week. Let's look at a new addition to the portfolio, which is synthetics. Nope, that's curve. We'll look at synthetics. Synthetics had this diamond pattern at the bottom, and it was a breakout, and we're above the 200. No, the 200 EMA is the white line. I never fix the colors. Sorry, guys. That's the 50 SMA. This is the orange is the 50 SMA, the yellow is the 100, and the blue is the 200 SMA. So 50 SMA and the 200 SMA was held as resistant. The 200 EMA held as resistance on the daily. But what's nice is if you look at it, just as with curve, this had a much more pronounced line of resistance because you had a touch point here, and this is on the daily. And it's obviously, there's quite a range of possibilities given there was no clear top at the beginning. But we're seeing a bit of support on the breakout as well as support over these moving averages. We need to see a breakthrough the 200 SMA and the 200 EMA in the daily to have an increasing comfortability with not down. As I said, that's what I care about, is not down, not necessarily up. On the weekly, there's a great deal of comfort to suggest not down. And what we're looking for is increased confluence to suggest that is the case. This does not entail I'm interested in any further of a position here. I had limit orders set down to like $3, maybe a little less, 275, and this was the last couple of days, but those limit orders did not get filled, and that's okay. I have no interest in a position up here. I have interest in a position down here, and I don't think I'm going to get the discounts. I don't think I'm going to get the discounts on anything. Maybe a little discount on convex. We'll see how the chart plays out. But it really is up to the dollar in most regards. Equities markets seem to be holding up. That's on the monthly. Let's go out to the daily. And we're finding some breaches of resistance and finding up some support on moving averages. Look at that, the 50 SMA, a breach to the upside and retest and flip support with the higher high. Trifecta of bullish confluence. Obviously, in a larger bearish macro trend setup. Look at this. Clearly, that's bearish from a macro standpoint. It's lower highs and lower lows, but on the micro, we have higher highs and higher lows. So this is looking for a directionality shift. Well, it doesn't mean much to me. I'm not interested in the assets in NASDAQ that much, but we'll see what happens with the pressures of the bond market, which is really driven by the dollar. And seems to me we're getting close, and this is why I like Luke Gromen the way he talks so much. We're at a tipping point, and the Q4, the end of Q3 and Q4 of this year are going to be freaking wild. We're going to see some very interesting things. I don't think it's going to be boring. I don't think it's going to be a snooze fest. I think there's going to be very interesting things, and it is imperative to be in the market, meaning looking at these charts, listening to social media, talking about the things that we talk about on the stream, because this is the time to understand the market, because it's either going to go really, really up or really, really down. If it goes really, really down, you're going to want to get some discounts. You're going to have some good opportunities to get into cash flow to purchase those $500 a week income streams at a discount. And if it goes up, then you're happy that you bought when it's down. And you're like, oh, that's nice. Because when it goes up, everyone starts to FOMO in. You get the speculation, you get the trading, you get the volatility, and now you're getting your $500 a week turning into $750 a week, and you're like, cash flow. Talman, can you give your thoughts on Ethereum? Looking for an entry. Do you think 1K is likely again? Let's take a look at Ethereum real quick. Talman with the buy low, sell high crowd. My man. Bitcoin looks to be putting in support on the 50 what is it? It's the 50 SMA on the monthly. A lot of people look for the 200 on the weekly, which is looking for a death cross right now. No, it's a 10 SMA and the 200 SMA. Death cross is more so the 50 SMA and the 200 SMA. But it looks like it's going to skip off. You know, historically, this isn't even log. Let's go log. We could. Historically, this is about where it finds a bottom, but you could easily see an aberration in the historic trend, especially if you have like a geopolitical conflict, or dare we say like a hot conflict rather than a cold conflict. But anyway, let's look at Ethereum. That's what he asked about. Well, there's resistance on the 100 SMA and the daily. We're above the TWAP, so the TWAP on the daily is expressing support as well as the 10 SMA. That's nice to see. 200 EMA on the weekly is expressing support, especially after a rip to the upside like that. That's a good presentation. I don't think it's irrelevant. This is at a premium. 878, 882, you're up 100%. You don't buy unless there's a discount. There's no discount here. This is not something that you're getting for a fire sale price. So whatever entry there was, it's gone. It's up 100% in June 20th in the last 12 days. So it's not something I would look to for a position, just being honest. Morning, thanks for sharing. Your enterprise strategy has really opened my eyes to this approach versus capital gains. I'm in the process of reallocating 20% of my portfolio with this in mind. And you build it over time. And clearly, if you have more capital, if you're 65 years old and you have $1 million in savings from a lifetime of work, you can have more of an income. And clearly, if you're 20 years old and you're broke as shit, you're not going to have much of an income. So somewhere in between, there's a happy medium, and there's always a path to get from broke as shit to a happy medium to 65, and you have a lifetime worth of savings. There's a whole range of things to figure out and to configure and choices to make, and really the ultimate expression that I offer is less risk nowadays. And clearly the origins of our stream were taking a meaningful amount of risk at times, and I don't like to take that risk anymore. And I like to tell the story of not taking the risk, and I like to tell the story of being comfortable and calm interacting with these markets. Because imagine that. Imagine telling a story where you're interacting with one of the most volatile markets on the entire planet, and you're just calm and relaxed and like, all right, you know, we get a paycheck at the end of the week. That's nice. Okay. So that's what I find most fascinating because it's the ultimate of contrarian. The crypto markets are really a story of frantically engaging. I bought something, it's up 1,000x. I bought Dogecoin to the moon, and that's bullshit. That's some kid shit. That's some, you know, that's some. It's, to me, that's a bit cringe. It's a lot cringe. It's nice to have hopes and dreams, but how about you engage with this shit professionally and like you're actually playing with money and you got your life in your hands and it's not a game. And how do you interact with these insane volatile markets in a sustainable way? And that's what I like to talk about nowadays. Anyway, so you're welcome, George. One Curious View, good morning. Jacob, very happy with my aura. I am very happy. I wish I took 10 times the size of the position. I had the capital. I just didn't do it because it's a new asset. And you guys know me. I rarely deploy capital to new assets. And I pulled the trigger on a position, and I should have done 10 times as much. And I had the capital. I could have done that. But I didn't, and I'm very, very happy with the position I took. It is an extremely productive asset on the biweekly. Hi guys, Hilda. How are you? Hi Cap. Nice to catch you live again. It's been a while. Has been a bit. I'm always here. It is a pleasure as always. What's up with Nancy and the situation on Taiwan? Markets pumped and dumped within seconds. Is that not a surprise? Markets always pump and dump. If capital is available to be taken, it's going to be taken. This is a permissionless market, which is why you're either capitalizing or being capitalized upon, which is exactly why I tell the story of I don't give a shit about number go up or number go down. I just care about people trying to engage with the market because it's a free market and you can buy something and sell something if you want. You're completely free to lose all your money speculating on a 10x Ethereum long that gets dumped because that's what this market does. This market is a predatory market. And there is no reason to say that equities markets don't do the same, except it's just to a different degree. There's more controls, there's more oversight. But of course, that's exactly what occurs, especially with the lower, the shit coins of the equities markets. The same exact thing happens. So at least I get to get transaction fees in these markets, and other people can too, which is the story that we tell. We get to own the fidelity of these markets. We get to own the Charles Schwab. We own the brokerage houses. And that's awesome. Disintermediation. It's such a meaningful thing in my opinion. Long-time lurker and fan. Keep up the great mindset, Dustin. You're very welcome. Gazik, how do you feel about synthetics? Can't make up my mind around the project. Synthetics has questionable attributes. You have to potentially consider hedging your SUSD debt, which I don't really do. I just throw it on Aave and call it a day. But I talked about synthetics a little bit earlier in the stream. I took a position at, it was like 306, give or take. We're at about 360. That's good to see. I thought this was a potential for a breakout of the diamond formation. Now it doesn't look so good in the weekly, but if you zoom in to the 4 hour, this was a nice diamond. A diamond is a very meaningful sign for a reversal, and that's exactly what happened. We had a breakout of the diamond, and it looks like we're not down, as in we're not going down from here. And to me, that's a position I like to be in. I don't mind if it goes down, but it's not a discount. There's no discounts in this market. This thing was a buck 46. So this was a rare position take because of the diamond formation, and it broke out. And right now we're above my entry price, and I feel comfortable that it's not down from here. But in any case, next year this produces a weekly income stream. And for me, the position size I took, if the yield on it stays as high as it is, that's like $700 a week, and that's nothing to sneeze at. So I have a good opinion on synthetics, particularly because of the history I have with the protocol. This was one of the first protocols I ever engaged with. It was capital gains back in the day. It was 70 cents to a $7 rip. Nothing to sneeze at. Alex the Lion, thoughts on Algorand for DeFi, irrelevant as of current. There's 50-something EVM compatible chains. They all do the exact same thing. All have different consensus mechanisms. What was it? What that $190 million hack was a Nomad? What a mess. I do have a decent opinion of Moonbeam, a Polkadot EVM chain, as well as was the Evmos, the Cosmos EVM compatible Cosmos hub. So I have. It's unfortunate because those are very promising networks. I have Evmos because I had a Cosmos position, Atom position for quite a long time at this point, and never bought a position in Moonbeam. But I played around on the network, and it works exactly like any Ethereum network. So the whole point of me saying this is that Algorand, the extent of what it could be, is the exact same thing as any of the 50,000 EVM compatible chains. Multichain.org shows. Oh, no, it's on the previous one. How many chains are there? 57 chains. So, yeah, I have no interest in Algorand or any of the other small chains, Tezos. I just, come on. The potential for any one of them is any other one of them. So what's the potential for Phantom? It's the potential for Avalanche. The potential for Avalanche and Phantom is the potential for Matic, is the potential for Polkadot, the potential for Cosmos hubs. Come on, they all have very similar potential, and the potential for all of them is the potential of Ethereum. So they're all fighting on the same turf in many regards. So in the future, each one will carve out a bit of a niche, but come on. So no interest in Algorand at all. Joe, it's not a game. This is not a game, my friend. This is business. Cannibalizing or being cannibalized is one or the other. It's one or the other. You're either predator or prey. That's just what it is. Half an hour late. It's okay. There's always the rewind button. Crypto Bets, can you and Messi link up and do a stream? It's been a while. Two best minds in DeFi. Pop it on Twitter. I'm happy to try and find some time with him. It's always a pleasure to talk with him. He's got a great mind nowadays. Wonderful. He's very impressive what he's done. And he's a great speaker. And he's absolutely a class act with regard to social media. It's just all around good guy. Adam, hello Noah. Given the diamond formation and breakout support retest, would you say this is a decent place to nibble buys on synthetics? I wouldn't. I want a discount. I want it to go down. I buy on the dip. This is not really a dip situation. Messi is so bullish. Would love to see you guys chop it up. I'm extremely bullish also. The difference is I don't care whether it's bullish or bearish because I don't have positions I would sell. I have purchased my positions. My positions will never be sold. They can never be sold. I own parts of these protocols that pay me on the weekly. So I don't really care whether it's bullish or bearish. I'm not along for the ride because I'm monitoring the markets and I can always make choices because I got cash flow, and cash flow could buy new more cash flow. So I really subscribe to the way Warren Buffett engages with markets. You save during times of prosperity. You deploy during periods of austerity when discounts are available. There's no discounts right now, so that's the deal. There's not much to do in the market. This is actually a bit of a boring market. And when the market's hot, you're not doing shit. The next bull run, I'm going to be sitting back and being like, oh, cool. $80,000 week. That's nice. That's there's nothing to do in a bull market for me anymore. It's going to be a very different story in the next bull market. Gazika, top answer. Thanks. Any opinions regarding LP on Uni, especially on assets you feel comfy holding? No interest on LPing. Also, do you see the SNX as a protocol that potentially taps into a $650 trillion derivatives market? Yes. Yes, I do, as well as GMX. I was late to the stream. 2, YouTube notifications have stopped working for me with your channel. It would be great if we had a channel on the Discord specifically for your streams. Oh, I didn't post today? Damn it. I'm sorry, guys. I usually post on the Rationality Only channel when I'm about to do a stream. It was that I posted the stream so early, I didn't post it in there. But anyway, back to normal this week, hopefully. I should have a stream. I'll be in the office tomorrow. I'll probably get a stream out either Thursday or Friday, and then I'm going to be away next week. So I'm taking a vacation. So I won't have streams next week. So I'm going to get one more stream out this week. I'll wrap you guys up for the week, and we'll see what's going on in the macro situation in the crypto space. Tuesday, August 2nd, 11:59 a.m. As always, pleasure to talk with you guys. Tell everyone to subscribe. I wish you all a wonderful day. After party on Discord for the most rational community in the entire crypto space. I will see you guys